Hi everyone, thank you for joining SLR's webinar today on UK emissions trading scheme. Your presenter today is going to be Graham Precious, but before we get started, I'm just going to run through some quick housekeeping. So to ensure that everyone can hear the presentation and to minimise any background noise, everyone will be muted, but please make sure to use the question box on the screen and we can pick up some of your questions at the end. So I'll pass back over to you, Graham.
Thanks, Nicole. And welcome everybody to this session on the UK emissions trading scheme, or UK ETS. So the purpose of today, it's quite a general overview, so I'll take you through the background and the history of the scheme, explain who it actually applies to, talk a bit about what you need to do in terms of compliance, and touch on what's happening in the future and future developments in the scheme. So just to introduce myself, so I'm Graham Precious. I'm a technical director in the carbon and energy team at SLR Consulting. I've been with SLR for coming to my 7th year now, and I've been working in this area for, sadly, just over 20 years now, across all types of UK ETS schemes and other legislation to do with carbon and energy, and helping companies as well develop net zero strategies, which we're increasingly seen as a high profile of and increasingly important. Just to touch on SLR, so SLR Consulting, we're an international consultancy. We've grown substantially in recent years. We operate over 6 regions. We operate internationally. We have, I think, close to 4,000 staff now, and we offer a whole range of technical services around all areas of the environment. We split across all these different areas: engineering, environmental management and planning, various specialist services, and land and water. So there's a whole range of services we do. What I do and what we do here sits in carbon and energy management and sits in our advisory services team. So that's just a bit of background to who we are. So in terms of the emissions trading scheme, so the UK ETS, as we know it now, came out of the EU ETS, the European Union Emissions Trading. Well, it originally was a scheme, then became a trading system. That was introduced in 2005, and at the time was the largest multi-country, multi-sector GHG emissions trading scheme that existed in the world. And the principle is to introduce a price for carbon emissions, and it's based on a cap and trade scheme. So the basic idea is that if you're emitting CO2, you're emitting gas via your processes, you will be charged on that. So, and the cap and trade scheme makes carbon become a tradable commodity. So when the legislation was introduced, it incorporates some specific sectors. So for instance, power stations or refineries, the island steel industry, cement and lime industry, paper, glass, ceramics and chemicals, and specific chemical processes. And the idea of that is basically we're capturing industries that emit significant amounts of CO2. And then there was a catch-all, which captures all other organisations based on a combustion capacity. So any site or installation, as known in the scheme, that is combusting a significant amount of fuel, and I'll touch on that in the next slide, and emitting CO2 via combustion of fuels was also captured. There's a separate scheme for aviation operators. So that's operators flying in and out of a European airport. So there's a UK and an EU ETS scheme for aviators. I'm not going to talk about that today. I'm going to talk about the industrial scheme. And approximately 11,000 installations participate in the scheme. Installation is what a UTS refers to a site as. So it's done at a site level. They're referred to as installations. And then since Brexit, post-Brexit, the UK separated from the EU scheme and now has its own UK emissions trading system. The UK emissions trading scheme is now UK ETS, which I'll talk about in more detail during the course of this. So just to take you through the timeline, as I said, the initial EU ETS system started in 2005. So there was a 2-year pilot phase, which was predominantly a free allowance allocation. So sites were given a free allowance of carbon emission allocation, and the idea was really to enable companies to get used to the scheme, to get used to the processes and the reporting processes. And then phase 2 commenced in 2008, and that was a 4-year phase, 2008-2012. And that introduced what was called the National Allocation Plans, which was the NAP. And that is basically each EU country had to submit a plan for the carbon emissions it proposed being allowed to emit under the scheme. So each EU country submitted a report to the EU saying, we intend, or we should be allowed to emit this amount of CO2. And that then fed into the amount of carbon that was available on the market. Unsurprisingly, most countries overestimated the CO2 emissions, so that kept the price of carbon credits down quite low. They hovered around €5 per tonne for quite a lot of time through phase 2. We moved into phase 3, which was 2013-2020, and there was a much stronger tightening of the amount of credits and allowances that were released into the market, and that saw a significant rise in the allowance price. So the price that people were paying for carbon through the scheme started to rise from €5 up into the sort of the 20, €30 price bracket. And then we move into UK ETS Phase 1. Again, I'll talk a bit more about this in the subsequent slides. So from 2021-2025 is the first phase of reporting under UK ETS. So we separated the scheme out, a completely separate scheme, completely separate market, but it very closely mirrors the EU ETS. But we have UK allowances rather than EU allowances. You can only use UK allowances in the UK scheme. And then moving into the future, we're on the cusp of UK ETS period 2, which is going to be 2026 to 2030. There's potential inclusion of new sectors within the scheme, so the UK maritime and waste to energy sector. We will see a further tightening of the allowance allocation in line with the UK government's net zero plans. So again, we're likely to see a price increase. And I will talk about all these things in a bit more detail through the next slides, but that's just a bit of a background to show you how the scheme has progressed over the years and developed over the years. So looking at the UK ETS in isolation. So I've taken this data here from 2022. It's a little bit out of date, but all the data was confirmed from 2022. So there are just under 700 operational sites. So just under 700 sites were participating in the scheme in 2022. The UK government then allocated just under 40 million free allowance allocation. So sites receive a free allowance allocation based on certain requirements, things such as carbon leakage come into play. But 40 million were distributed for free. And then just over 80 million additional allowances were auctioned. And the average allowance price at the auction was just over £75 per tonne. Now, 2022 was a high year for allowance price, but the allowance price at auction, the average price was just over £75 for each UK allowance for each tonne of CO2 you emit, and that generated approximately £6 billion of revenue for the UK government. Now, the interesting thing is that just under half of the free allowances were allocated to the top 10 emitters. So there's just under 700 sites operating in the scheme, but the top 10 are responsible for probably just around half of the actual allowances as well, the emissions as well. So there's some big sites in there. Unsurprisingly, we're looking at steel manufacturing, refineries, and cement production. So these are all large sites involved in very high emitting industries. But there's very much the 80-20 rule applies again, and there's a very long tail of sites that emit relatively small amounts of emissions, but are captured in the scheme and still have to report. So that's just a bit of background to the overall scale of the scheme. In terms of who has to participate, so the scheme defines what are known as regulated activities. And the legislation here is the UK ETS order from 2020. So that's a UK legislation that states which sites are captured and which entities are captured under UK ETS. Now, this mirrors the EU ETS qualification criteria. So for the current phase of UK ETS, it's the same in terms of the the sectors and the types of sites that are captured under the scheme. And what's captured, what's known as Annex 1 activities. So under Annex 1 of the regulations, there's a list of activities that have to be captured under the ETS scheme, known as regulated activities. So this has been transferred into UK legislation, so the Annex 1 activities remain the same under this Greenhouse Gas Emissions Trading Scheme Order of 2020. So as I've already identified, these include things such as cement manufacture, steel, aluminium processing, and there's a list of specific chemical processes as well. So it's not just chemicals in general, but specific processes, which you can see that table on the right-hand side, some specific chemical processes there that are captured under the ETS scheme. So if you operate a site and you are producing one of those products, or you are in one of those sectors, you'll have to report under the scheme and participate. So that's the specific industry sectors, but then we have the combustion threshold. And the combustion threshold captures sites from all sectors, including public sectors, so sites such as hospitals and universities, and even sites you wouldn't expect to be captured under this, such as data centres, are captured under this predominantly due to the backup generation units they have. So the combustion threshold basically states where your site has equipment on it, combustion equipment, with a total rated thermal input that exceeds 20 megawatt thermal, then you'll need to participate in the scheme. Now that's based on individual equipment with a rated thermal input of 3 megawatts or greater. That symbol's the wrong way around actually, but greater than 3 megawatt thermal. And you can exclude units that use only biomass as a fuel. So basically what you're looking at is looking at your equipment on site. What equipment do you have that's 3 megawatts or more in terms of thermal input? Add the combined combustion up, and if that combined figure comes up to 20 megawatt thermal or more, then your site will need to participate in the scheme. When we're talking about combustion, it means any oxidation of fuels, and typically would include boilers, burners, turbines, heaters, even fuel cells, and combined heat and power plants. In the food and drink sector, things like fryers and ovens as well. So this is where we see the majority of sites actually captured by the scheme. And what things to be aware of, again from past experience, if you are increasing the capacity of your site in terms of thermal equipment, you are buying new equipment, installing new boilers, installing a new combined heat and power unit. It's being aware of that legislation and the threshold, because we quite frequently will see and come across sites that have crossed the threshold but didn't realise that then qualifies them for the ETS scheme. So it's one thing I'd say to be aware of that is if you're installing new equipment, always be aware of the fact that it might take you over that ETS threshold. So that's how you become a participant in the scheme. So once you are in, if you cross those thresholds or you're operating within one of those specific sectors, your site then needs to operate under a greenhouse gas permit or a greenhouse gas emissions permit. You'll see GHG permit, you'll see GHGE permit. So the permit itself, you need to register, and it's with either the Environment Agency in England, SEPA in Scotland, NRW in Wales, and the Northern Irish Environment Agency in Northern Ireland. So it's run by the regional environmental bodies, but the legislation is the same across each region. So the legislation and the requirements are the same. It comes across the whole of the UK, but you will be reporting to your local environmental agency. So you'll have to apply for a permit, and then you'll be issued with a permit. And the permit contains various information, the name of the operator, details of the site boundary, the processes on site, what your emission sources are on site. By emission sources, you can see on the right hand side, that's basically a list of the equipment that is emitting CO2 or is combusting the fuel. You'll have to name all your fuel sources. So typically we're looking at, again, So I should point out this is combustion only, so it doesn't apply to electricity. It's just doing direct combustion on site. So typically natural gas, LPG, gas oil, even acetylene is captured. So a lot of sites will have a couple of acetylene cylinders and a couple of blowtorches. That will also be included. You need to include a list of your metering equipment. So how is an explanation of how you're going to actually capture the data and report your emissions. And you'll also have to produce a set of ETS management procedures. So your own site operating procedures will also be accompanied by a site plan which shows the emission points, where fuel's stored, where the meter equipment is on site. There's also a secondary set of procedures for sites receiving a free allowance allocation called the monitoring methodology plan, which also needs to have a separate flowchart. So it can get quite admin heavy in terms of detail, but the basic principle is, so once you cross those thresholds, you need to apply for the permit, operate under the permit, and that permit will explain how you are going to monitor and report your emissions. Now, within the legislation, there's an opt-out scheme, and there are two types of opt-out. There's the small emitter opt-out, which also applies to hospitals as well. But a small emitter is classified as a site that emits less than 25,000 tonnes of CO2 per annum, and the combined thermal input of equipment on site is less than 35 megawatts. So you can opt out as a small emitter. Now, a small emitter opt-out site isn't opting out completely, so it's not all good news. You still need to operate under a greenhouse gas permit. You still need to monitor and report emissions. The difference is, rather than having to buy and surrender allowances, you actually have an emissions target that is set, and you must meet that target. If you do not meet your emissions target, then a fine is issued, which is roughly the equivalent to paying for the CO2 that you emitted over the target. It's based on historical UK allowance prices. Another added benefit, there's no requirement to have third-party verification of emissions. So if you're operating under the scheme, you'll have to have third-party verification of your emissions. So you don't have to do that, but you can be subject to an audit by the EA, CPRA, etc. And any NHS hospital site can also operate as an opt-out. So it's known as the Hospital and Small Emitters Opt-out Scheme. Although I said you need to be aware that it's not entirely opting out of the scheme completely. However, if your annual emissions are less than 2,500 tonnes, then you can be classified as an ultra small emitter, and that is a genuine opt-out scheme. So there's no requirement to operate under a GHG permit or report emissions annually, though you do have a responsibility to monitor your emissions annually and ensure that they remain below the 2,500 tonne threshold. So if you go above that, you would then have to inform the Environment Agency and potentially rejoin the scheme. So just to be aware, we have seen this with opt-outs, that people can get a bit confused and you think, oh, I've achieved the small emitter opt-out, so I won't have to participate in the scheme. That is not the case. You still have responsibility to report. And even as an ultra small emitter, you still need to be shown that you're monitoring those emissions to make sure you stay below those thresholds. So they're the types of permits. So you have a full GHG permit, or you can have a GHG small emitter and hospital opt-out permit. In terms of compliance, there's a specific timeline. So once you're in the scheme and operating under a permit, you're required to report your emissions on an annual basis, and then you will be required to purchase and surrender UK allowances, UKAs, equivalent to your annual emissions. And the timescales are as such. So it's a calendar year reporting scheme. So it's January to December. So it's 1st of January to 31st of December. So you need to monitor your emissions and fuel consumption as per your documented procedures for that period. Also be aware if there are any changes to site, such as new equipment purchased, you remove equipment, you may have a meter failure, You may change a fuel source. Anything on those lines, you need to report that to the regulator, so the Environment Agency or whoever is your regional regulator. That has to be reported to them, and then you would potentially have to vary your permits. You'd have to undertake a permit variation. So it's something, again, to be aware of. It's not just monitoring and reporting the emissions, it's also being aware of the equipment and fuel sources on site and any changes to site. So your emissions then have to be third-party verified. So this is under a standard GHG permit. So you have to have your reported emissions third-party verified. So there are certain UCAS accredited ETS verifying organisations. There's a list on the EA website of accredited organisations. And the verification process normally starts around November and will end in March, because that's when you have to submit your final emissions data. But that would usually involve a site visit. So a verifier would come to site, he would look at your permit, make sure that the equipment listed on the permit is still on site, make sure there aren't any changes, discuss monitoring processes and procedures with you, and then the verifier will be checking the calculations and the emissions data and confirming that that is correct and accurate before it's submitted to the Environment Agency. So the deadline to report your emissions is by the end of March. So you're monitoring and calculating your emissions for Jan to December. Then by the end of March, you need to submit your annual emissions report and, if relevant, an activity level report, which links to your free allocation, to the regulator. And that has to be signed off by the verifier as well by the end of March. So by that time, you'll know what your annual emissions are. You then have until the end of April to surrender your allowances. So you'll either have to, you may have a free allocation, you may have some in the bank already. If not, you'll have to purchase UK allowances to make up the amount of your emissions. So basically, if you've reported 10,000 tonnes of CO2 at the end of March, you need to surrender 10,000 UK allowances by the end of April. So it can be a combination of free allocation and additional purchased allowances. Normally it's a mixture of both. So that's the timescale. The thing to really be aware of it is the fact that you need to make sure any changes are reported to the Environment Agency. It's part of your actual permit. So it does state on there that you will report information such as that to the Environment Agency or SEPA, etc. So in terms of emissions reporting, emissions and relevant fuel consumption must be monitored, data captured for January to December, and the annual emissions report submitted. There's something called the METS portal, which is basically the Manage Your UK Emissions Trading Scheme Reporting portal. That replaced a previous system. It looks a bit like a tax return. If you've ever filled in a tax return online, it's a very similar looking system. So you'll need to have been registered on this system on site, and then you will submit your data to there. So as I said before, the permit will explain the data that you're going to capture and the process you're going to follow. You convert the fuel consumption into emissions using conversion factors that are updated annually by the government, specific for UK ETS reporting. So you don't just use a generic set of conversion factors. The government releases a new set of conversion factors each year for you to use specifically for your ETS reporting. And your emissions will consist of a potentially combination of direct process emissions where relevant, and then the indirect emissions from fuel combustion. It's worth being aware that it's only emissions from stationary equipment. So ETS only captures stationary equipment fuel consumption. So you wouldn't include things like forklift trucks and certainly not road-going vehicles. I mentioned before, if you're receiving a free allowance allocation, you also need to complete what's called an activity level report, which may lead to an adjustment in your free allocation, depending if there's been there's a 15% threshold for changes on site. That data is verified and then submitted via the METS system. It's also worth being aware, so biofuel emissions, we're increasingly seeing the use of biofuels and HVO on site replacing potentially gas oil and diesel oils. So if you're using a bioliquid, it must meet the RED directive sustainability criteria to be classified as zero emissions. Currently, solid biomass doesn't have to meet the specific criteria. So your biofuel emissions, if it meets the RED criteria and another specific criteria, and if it's biomass, can be classified as zero emissions. So you won't have to report them as emissions that you need to buy allowances for. They do apply something called the residual factor. So the actual CO2 emitted through use of these biofuels is captured and reported, but it's separate to your emissions that you need to buy allowances for. So it's still treated as zero carbon. So we're increasingly seeing that. Again, it's worth being aware if you are thinking, oh, I can switch to biofuel and reduce those emissions, it's got to meet the right type of criteria. So again, if you're thinking of switching, make sure your fuel supplier can provide with the right information and evidence to show that it meets the Renewable Energy Directive requirements. So in terms of carbon allowances, as I've said, you need to, after you report your emissions, you need to purchase and surrender. They're called known as UKAs, UK allowances, equivalent to your reported emissions. So you need to open a specific registry. It's called the UK registry, which is basically a bank account for your carbon credits. So you need to set that up. You need to have that in place. And then potentially for some sites, you'll receive a free allocation. So your free allocation will be deposited there usually in February. So for let's say the 2025 reporting period, you'll receive a free allocation in February. So you'll know what's in the bank account, and then by the end of the year, you'll know what additional credits you'll need to purchase. You can potentially purchase credits directly from auctions, but you need to set up what's called a trader account, or often what sites do will purchase from a third party trader, particularly if you're only buying a small number of credits. The free allocation is based on a number of things, but carbon leakage status is one of the key elements that comes into it. So there are a list of specific sectors that are classified as carbon leakage. And by that, we mean that potentially that product could be just moved offshore, manufactured offshore. It doesn't have to be manufactured in the UK or in the case of the EU scheme in Europe. So to avoid sites doing that and being subject to an increased tariff due to the carbon price, an increased amount of free allocation is awarded to carbon leakage sites. The UK allowances themselves are a tradable commodity, so the price is subject to market fluctuations. So you can see in the graph opposite, in 2022, the allowance price peaked at over £100 per tonne. So this is the UK allowance price. Since then, it's been in a generally gradual decline. It got down below 40 euros around springtime 2024, peaked back up around 50 euros, but it's generally been hovering between sort of 40 to 50 euro mark. But it did increase significantly, say around 2022. So it's not my area of expertise in terms of tracking the market. It is a commodity. There are brokers out there that understand the market certainly better than I do. But it is something, particularly if you're buying a large amount of credits, is understanding these, trying to understand this market, the price fluctuations, and planning for that. The government does have in place what's called this cost containment mechanism. So the principle is that the UK allowance price should closely match the EU allowance price, so we're not unfairly affecting UK industries against their EU competitors by having a significantly higher carbon price. So if for 3 consecutive months there's a significant divergence in prices, the government can potentially reduce the UK price to bring it closer in line with the EU price under what's called the cost containment mechanism. This was triggered a couple of times a few years ago, but the government chose not to adjust the market. So they don't have to make an adjustment, they chose not to. And more recently, the EU price has been higher than the UK, so we've actually been lower than the EU allowance price anyway, and certainly for the last, I believe, 12 to 18 months, that's generally been the trend. And if you're a new site to the scheme, you can apply for a free allocation of allowances via what's called the new entrant reserve. So the government will hold some allowances back to allow companies that are new to the scheme, sites new to the scheme, to receive a free allocation. So just moving into the future, so what's happening now? So we currently come to the end of what's called period 1 of the first phase of UK ETS. So 2025 will be the final year. So the government published a consultation called Developing the UK Emissions Trading Scheme, and the response to that consultation was published last year. So some of the key elements around this are the free allowance allocation cap will be aligned with the government's net zero strategy. So what we're going to see is a significant tightening of the free cap, and I've got a slide on that to follow. So the main takeaway is that sites that are receiving a free allocation need to be aware that that may well be reduced in the future. The domestic maritime sector is going to be included from 2026, and the energy from waste and waste incineration sector will be included from 2028, with a monitoring period from 2026. So from 2026 to 2028, sites in this sector will be required to operate under a permit, monitor and report emissions, but they're allowing 2 years for sites to understand the processes, and also for the government to confirm the reporting processes and how, for example, the level of biogenic materials in waste is going to be reported. So it's to allow both sites to be prepared for the scheme, but also the government to take some learnings away from those 2 years before confirming exactly how it's going to operate. But then from 2028 onwards, those sites will be participating in full in the scheme, will be required to purchase and surrender allowances. There's still the possibility of linking with the other emissions trading schemes, obviously specifically the EU ETS. That still remains a possibility, and as other countries and other regions develop their own emissions trading schemes, potentially linking, long term to a global scheme is still being considered. There's been a little bit of a change, and this is quite specific to sites that are already participating in this, and sites that have CHP should may be aware of this. But due to a quirk of the scheme in the first part of this phase, if you operated a combined heat and power plant and you were exporting some electricity, you were classified as an electricity generator, which did have a significant impact on your free allocation. So from 2026, sites that operate a CHP, but that's certified on the CHP QA, you will not have your installation classified as an electricity generator. So the knock-on effect of that should hopefully be for some of these sites that you'll go back to receiving a higher allocation of free allowances. So it felt like a bit of a correction from something that was a little bit unfair, I think, in the first phase for sites who were operating CHP plants, but predominantly to serve their own plants, but their own sites, but had to then classify themselves as an electricity generator due to a little bit of export. No plans at this stage to change the qualification thresholds, so that at this stage will remain the same. But it's important to remember all this is still under review, and I think as the scheme evolves, we may well see further changes in the future. And there is a link there in the slide to the actual response to the consultation itself. So in terms of the future costs, so one of the key outputs of that is the government has said that they will align the amount of free allocation with the government's net zero target plan. So basically what we'd like to see is a squeeze in allocation. So what this suggests then is 30 to 35% fewer allowances will be available for auction across this phase. So that potentially will result in increased cost per participant, again the supply and demand side of it. But the government proposed to ease this transition by releasing an additional just under 54 million previously unallocated allowances to auction over 2024 to 2027. So there's a few charts here. These are just trying to explain the process. But if you look at the top right-hand corner, you can see that the allowances issued are actually slightly higher than the actual reported emissions over 2021 and 2022. The green line is the cap, and the dotted green line is where the cap would have remained under the existing route and the existing legislation. But what the government's proposing is to reduce this cap, so you can see that green line drop significantly out towards 2030. So there's going to be fewer free allowances allocated than previously would have been expected. This is going to tighten the market up and align it with the net zero plans. But in the chart below that, with the orange bars, you can just see the 4 light orange bars there from 2024 to 2027. So to avoid the big drop off in allocation for 2024, they're releasing some additional allowances to make that transition a little bit tighter. But as you can see, by 2030, there's a significant reduction in the free allocation of allowances. So as a consequence, given the nature of supply and demand, if you see the chart on the bottom left-hand side of the page, various organisations have used this data to try and project what they think will happen to the UK allowance price. So unsurprisingly, the trajectory is generally upwards. So again, most of these are looking at somewhere between 80 to 100. Well, this is the euro. This is actually euro allocation, but euros per ton. Again, you expect the UK to follow a similar trend. So what we're expecting to see is a price increase. Everyone's projecting a price increase. I say it's not my area of expertise, and price will fluctuate. But the simple side of supply and demand is the whole nature of the scheme is it's designed to tighten the allocation, to make it more expensive, to make carbon more expensive, and to drive decarbonisation. So I've got a whole list of further information there. I've gone through that quite quickly. There's lots and lots of background reading potentially that would come out of that. But the key things to look out for, the legislation, so the UK legislation is the Greenhouse Gas Emissions Trading Scheme Order 2020. So that is the actual piece of legislation that feeds into everything else. The government has produced guidance on the UK government website. There's guidance to help participants and organisations that think they may become a participant understand how to manage a scheme, what you need to do to report under the scheme. I mentioned before you need to have independent third-party verification. So there is a list there of UCAS accredited ETS verifiers. So again, you have to use a verified company to verify those emissions. So there is a list there of those organisations. In terms of the ETS, the data I was talking about, the price of allowances and the carbon markets, there's an ETS market report which runs into that. There'll be a new one due quite soon, I think. It may have been updated already. So if you're interested in the historical price of carbon, there's a link through there. Moving into the EU, there's the EU Renewable Energy Directive. So again, that explains the requirements for your biofuels. If you're looking at using biofuel, that explains the requirements. And then a lot of the future side of things I touched on today came from that consultation response. So there's a link there through to the response. Again, there's lots of other information coming out of the government at the moment around ETS in terms of small changes and how these changes are going to be imposed. So there's a lot of things happening at the moment around the future. But the main thing to be aware of, I would say, is potentially the cost may be going up, and the drive of that, the whole legislation is to increase costs around that side of things. So that's the presentation. I appreciate that there's a lot of information there. ETS is quite a complicated subject. I've just tried to give you a little bit of insight and background into how that works. The things you need to be aware of. I would say the key takeaway is for sites that aren't currently in the scheme, It's just to be aware of that combustion threshold, and if you do increase the combustion equipment on your site, to be aware of the fact that this is an extra piece of legislation that may come into play on your site. We do frequently see and come across sites that should have participated soon in the scheme, but failed to do so, and are subject to a fine, historically going back to the avoided cost of carbon that they may have incurred during that period. For sites that are in the scheme, again, just be aware of the potential changes to free allocation, and to budget for that potential additional cost that you may be looking at down the line up to 2030. Okay, got through that a little bit ahead of schedule, so that should leave plenty of time for questions if we've got any questions there. I think Nicole's been collating them, so what do we have, Nicole?
Yeah, just popping back on as we've had a few questions through the chat box. So the first one is there any expectation of the UK ETS scheme being expanded to include other sectors or smaller sites in the future?
At the moment, the government has said no to that at the moment. So again, for 2025, for 2026, 2030, we're not expecting any changes in the threshold. But one thing to be aware of, that in the EU, they are expanding the scheme. There's something called EU ETS 2, which is expanding the EU scheme into the commercial building sector and the transport fuel sector. So there is some movement in the EU, and historically with the scheme, where the EU has led, we have followed in the UK. So it's just something to keep an eye on. But under the existing UK scheme as it stands, we're not expecting any changes in the threshold. It was mentioned in the consultation, but rejected in the consultation. So I would say the expectation up to 2030, other than the expansion that's already agreed in maritime and waste, I wouldn't expect to see any changes.
Thank you for that. So we have another question that's come through. Do you know if there is still a desire at the government level to link the UK ETS with the EU ETS scheme?
Again, in the consultation, it's still referred to, and when the UK split from the EU scheme, it was already referred to, or always referred to, as a desire to potentially link the two schemes. So I think the desire is still there. Whether this move in the EU to a broader scheme will impact on that, I'm not sure. Again, we've had a change in government that may be a little bit more EU-centric. Again, I'm not expecting anything between now and 2030, but certainly in the future there is an expectation of that. That's still on the cards, on the agenda. I think part of that would be to limit any exposure to UK businesses to significant price increases. And there is the potential that we have seen other countries have produced their own emissions trading schemes, and I do think the long-term idea would be to have a global market for carbon, the one single global market, so you could buy allowances from wherever, whichever country is operating a mandated scheme. So I would say it's still potential. It's still I think there's still something that there is a desire within government to do, but again, not in the short term.
Okay, another question we've had through the chat box is there a list of businesses that are opted out and or have opted out and have been fined?
There is a list. So the data I show, that there's a list. You can see a list of businesses that receive a free allocation. So there isn't currently a list of opted out sites. There is discussion. Again, there's a consultation recently about the government sharing more information around ETS, so that might be available. But at the moment, the data that's published is the list of free allocation. So you can see that information, which is where I got the slide from, where I was showing those top 10 sites. In terms of sites that have been fined, that is publicly available. So I can't remember exactly where it is, but you can find that on the government website. So companies that have been subject to a fine for not participating in ETS or not reporting properly, that is publicly available. So you can see the name of that company, they are named and shamed, and the size of the fine is available. So I didn't touch on fines. in the course of this presentation, but there are fines for various misdemeanors under the scheme. So for failing to report correctly, failing to surrender allowances, the one we see most frequently is failing to participate in the scheme when you should have been participating in the scheme, which is I've sort of touched on that before, and there'll be a historic fine levied against that. So yeah, it does happen. Sites are found out that should be in the scheme. Sites fail to report properly. A lot of it quite often would link to personnel changes. Again, a risk is if you operate a site and ETS reporting is being historically in the hands of a single person, and that person leaves the company. Again, we've been brought in a couple of times to sort of do a last minute rescue of an ETS reporting session, because that information can be lost and people may not even realise the need to submit this legislation. So that information is out there. I'm not aware of a list of opt-out sites, just a list of sites in the free allocation that's actually allocated.
That's great. Another question we've had through is, are emissions reports publicly available?
No, again, so that information's not public available. The free allocation is available. So I don't know whether, again, I think you could possibly, if you could request information around sites, but it's the actual allocation that's published. So the report on the free allocation is published.
Okay, another question. Could you just run over the info regarding changes in 2026 to installations that run CHP QAs?
Yeah, so basically, for the first part, so the 2020 to 2025 reporting period, if you operate a combined heat and power plant on your site and you are using the electricity, using the heat, but you're also exporting some electricity, that site would be classified as an electricity generator. And without getting into the complexities of it, your free allocation as an electricity generator is lower than if you were not classified as an electricity generator. Because you basically, so they've then moved back from 2026 to 2030, that will not apply. So as long as you're operating under the CHPQA scheme, so you're reporting under CHPQA and you're certified under that scheme, the site will not be classified as an electricity generator, which will potentially increase your free allocation of allowances, basically. So as long as if you operate CHP, even if you're exporting some electricity, potentially you'll be able to receive a higher free allocation than did under the first period. So there's a lot more complicated maths behind the actual free allocation. I don't have time to go into the detail of that today, but the basic principle is it's good news if you're a CHP operator and you're operating under CHPQA.
Thank you. Another question is there any chance of expanding GHG monitoring and pricing to life cycle assessment, or will it remain with immediate site emissions?
At the moment, I'm not expecting any expansion beyond immediate on-site combustion. I think the difficulties in expanding it out come into gathering information and verifying that information. So I'd expect the reporting to just remain at the site level, purely due to if you get involved in ETS, the scrutiny of the data is quite high. So if you're then going down your supply chain to get, let's call it second-hand data, I think it's going to be difficult for them to verify that. So at the moment, it's purely based on at an installation level, site level, and the combustion at that site. I don't envisage that changing, certainly in the short to medium term, and there's been no indication of that expanding that I'm aware of.
Okay, that's all the questions we've had through today. Was there anything else you wanted to say, Graham? Or
No, not really. Just just thank you for your attendance. I appreciate that there's a lot of information there. It is potentially a complex scheme. I think my key takeaways would really be if you're not a participant in the scheme, just make sure that you you shouldn't be a participant in the scheme. So again, check those thresholds, particularly if you've made some changes to site. And then keep an eye out for any future announcements if you are participating in the scheme around the next 5-year period, because it's still being firmed up and ironed out, and then there's some guidance being published, constantly updated on that. So just keep an eye out for that, really. So yeah, but thank you, everybody, and yeah.
Yeah, thank you everyone for joining today. Just to let you all know, the recording will be shared via email, and there'll be some contact information for Graham as well if you wanted to get in touch. So thank you, everyone.
Thanks all.